what should we be expecting the Reserve Bank of India to do? As our viewers know, there's been a change of guard at the Reserve Bank of India, and that led to a certain set of actions, plus this challenge that has been posed by the United States and its reciprocal tariffs. Soft growth, inflation backdrop, and you believe that there are likely going to be significant cuts. Explain that to our viewers.
Yeah, the path for the RBI is fairly clear, and there aren't per se any major policy trade-offs. So for FY26, RBI's projection for growth is at 6.5. We think growth will end up being below 6% next year, which in the ongoing financial year, which means that growth will be below trend. And at a time when export demand is soft, global demand is soft, we need counter-cyclical policies in order to support domestic demand. And, as I mentioned earlier, between monetary and fiscal policy, we think monetary policy has the room. Second, inflation is very well aligned with the RBI's target of 4% midpoint. In fact, for most of the next 2-3 quarters, we think headline inflation will actually average below the 4% target. So we are very well aligned to the target. And third, this is the outlook on currency. This is generally not been a major hurdle for India, but we are also seeing dollar weaken or appreciation pressure on the currency, which means that typically when, for many emerging markets, currency tends to be a hurdle for central banks to cut rates, but that hurdle is also not there. Oil prices are down. So I think all, put together on the macro side, there is a room as well as a need to cut rates. So we are still at, for instance, real rates in India are high at 6% repo rate and average inflation of 4% over the next 12 months. Real policy rates are at 2 percentage points, which is more in the restrictive territory. In our view, there is room for another 100 basis point more in rate cuts to bring down the repo rate to 5% by the end of this year.
If you like the video, do like, comment, share and subscribe.